Question 1. The efficiency study reveals that certain operational adjustments at Sunny Optical could significantly reduce production costs. However, these adjustments involve potentially altering quality control checkpoints and renegotiating terms with key component suppliers. What is the most appropriate next step for Sunny Optical to ensure responsible implementation? Option A. Proceed with the operational adjustments that offer the most immediate cost saving, assuming that any minor regulatory deviations can be addressed retroactively if they arise. Option B. Prioritize the cost-saving aspects of the efficiency study and implement all recommended adjustments immediately to gain a competitive advantage, with a general understanding that compliance is important. Option C. Conduct a comprehensive regulatory and ethical impact assessment of all proposed adjustments, consulting with legal and compliance teams to ensure adherence to all relevant laws and industry standards before implementation. Option D. Implement the proposed changes that appear to have the least direct impact on product quality, while deferring the supplier renegotiations until after the initial cost savings are realized. Correct answer is C. Conduct a comprehensive regulatory and ethical impact assessment of all proposed adjustments, consulting with legal and compliance teams to ensure adherence to all relevant laws and industry standards before implementation. Explanation. This scenario is professionally challenging because it requires Sunny Optical to balance operational efficiency with its regulatory obligations and ethical responsibilities. The pressure to implement cost-saving measures must not override the fundamental duty to comply with relevant laws and maintain ethical standards in its business practices. Careful judgment is required to ensure that any proposed changes are not only economically beneficial, but also legally sound and ethically defensible. The correct approach involves a thorough review of the efficiency study's findings against the backdrop of all applicable regulations and ethical guidelines relevant to Sunny Optical's operations. This means meticulously assessing whether the proposed efficiency measures, such as streamlining quality control processes or altering supplier agreements, could inadvertently lead to noncompliance with product safety standards, labor laws, or fair trading practices. This approach is best professional practice because it prioritizes regulatory adherence and ethical conduct, which are foundational to long-term business sustainability and reputation. Specifically, it aligns with the principles of responsible corporate governance and the expectation that companies operate with integrity and respect for the law. Implementing efficiency measures without a comprehensive regulatory impact assessment is professionally unacceptable. This approach fails to consider potential legal ramifications, such as violating consumer protection laws if product quality is compromised, or breaching contractual obligations with suppliers. It also risks ethical breaches by potentially exploiting loopholes or engaging in practices that, while not explicitly illegal, are considered unfair or harmful. Another incorrect approach is to proceed with the efficiency study's recommendations solely based on the projected cost savings, disregarding any potential regulatory concerns raised by internal stakeholders. This is professionally unacceptable, as it demonstrates a clear disregard for compliance and ethical considerations, prioritizing short-term financial gains over long-term legal and reputational risks. Such a decision could expose Sunny Optical to significant fines, legal action, and severe damage to its brand image. A further incorrect approach involves selectively implementing only those efficiency measures that appear to have minimal regulatory overlap, while ignoring those that might be more impactful but also more complex to assess. This is professionally unacceptable because it creates an incomplete and potentially misleading picture of compliance. It suggests a reactive rather than proactive stance towards regulation and could lead to unforeseen compliance issues arising from the overlooked areas. The professional decision-making process for similar situations should involve a structured impact assessment framework. This framework should mandate a cross-functional review involving legal, compliance, operations, and relevant business units. It requires identifying all potential regulatory touchpoints for each proposed efficiency measure, evaluating the likelihood and severity of noncompliance, and developing mitigation strategies or alternative solutions that achieve efficiency goals without compromising regulatory adherence or ethical standards. This systematic approach ensures that decisions are informed, defensible, and aligned with the company's commitment to responsible business conduct. Question 2. Governance review demonstrates that Sunny Optical has identified several areas for improvement in its internal control framework, which approach best ensures compliance with disclosure obligations while protecting the company's strategic interests. Option A. Conduct a comprehensive impact assessment of the identified control weaknesses on Sunny Optical's financial reporting, operational efficiency, and market reputation, and develop a disclosure strategy based on the materiality of these impacts. Option B. Delay public disclosure of the governance review findings indefinitely, citing the need for further internal investigation and strategic planning, without providing a clear timeline for communication. Option C. Immediately disclose all findings from the governance review to the public to ensure maximum transparency, regardless of their immediate materiality or potential competitive implications. Option D. Minimize the disclosure of the governance review findings, focusing only on minor procedural adjustments and omitting any information that could be perceived negatively by investors or competitors. Correct answer is A. Conduct a comprehensive impact assessment of the identified control weaknesses on Sunny Optical's financial reporting, operational efficiency, and market reputation, and develop a disclosure strategy based on the materiality of these impacts. Explanation. This scenario presents a professional challenge because Sunny Optical, as a publicly listed company, must adhere to stringent governance and disclosure requirements. The challenge lies in balancing the need for timely and accurate information dissemination to the market with the potential for sensitive internal information to be prematurely revealed, which could impact competitive advantage or investor confidence. Careful judgment is required to determine the appropriate level of detail and timing for disclosures. The correct approach involves a thorough impact assessment that considers the potential effects of the governance review findings on Sunny Optical's financial performance, market position, and regulatory compliance. This approach is right because it aligns with the principles of good corporate governance, which mandate transparency and accountability to stakeholders. Specifically, it adheres to the spirit of regulations that require timely disclosure of material information that could influence investment decisions. By assessing the impact, Sunny Optical can ensure that its disclosures are both compliant and strategically sound, providing investors with the necessary information without causing undue market disruption or revealing proprietary information. An approach that focuses solely on immediate public disclosure without considering the implications for Sunny Optical's competitive landscape is incorrect. This failure stems from a lack of strategic foresight and could lead to the premature revelation of sensitive information, potentially harming the company's market position and profitability. It also risks misinterpreting what constitutes material information in a way that is not aligned with regulatory expectations for investor protection. Another incorrect approach would be to downplay or omit findings that might be perceived negatively by the market. This is ethically unsound and violates regulatory requirements for truthful and complete disclosure. Such an approach undermines investor trust and can lead to severe penalties, including fines and reputational damage. It demonstrates a disregard for the principles of transparency and fair dealing with the investing public. A third incorrect approach would be to delay disclosure indefinitely, citing ongoing internal investigations or strategic considerations without a clear timeline. This can be interpreted as an attempt to manipulate market perception or withhold material information, which is a direct contravention of disclosure obligations. Regulators expect prompt communication of significant events. Professionals should employ a decision-making framework that prioritizes understanding the full implications of the governance review findings. This involves consulting with legal counsel, compliance officers, and investor relations teams to assess materiality and potential market impact. The framework should guide the development of a disclosure strategy that is compliant, transparent, and strategically beneficial for Sunny Optical and its stakeholders. Question 3. Research into the potential implications of Sunny Optical's new product launch on its market position and investor relations reveals a need to assess various strategic pathways. Which approach best balances the company's growth ambitions with its regulatory and ethical obligations? Option A. Conduct a comprehensive impact assessment, scrutinizing regulatory compliance, market reception, operational readiness, and potential reputational effects before proceeding with the launch. Option B. Rely on internal projections and optimistic market sentiment to justify the launch, downplaying any potential negative feedback or operational challenges. Option C. Focus primarily on the projected revenue increase from the new product, assuming positive market reception and minimal regulatory scrutiny. Option D. Expedite the product launch to gain first-mover advantage, addressing any regulatory concerns reactively as they arise. The correct answer is A. Conduct a comprehensive impact assessment, scrutinizing regulatory compliance, market reception, operational readiness, and potential reputational effects before proceeding with the launch. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for rapid growth and the imperative to adhere to regulatory compliance and ethical conduct. Sunny Optical, as a publicly listed entity, is subject to stringent disclosure requirements and market integrity rules designed to protect investors and maintain fair trading. The pressure to meet aggressive growth targets can create an environment where shortcuts or misleading information might be considered, making robust impact assessment crucial. The correct approach involves conducting a thorough and objective impact assessment that considers all potential consequences of the proposed product launch, including regulatory, financial, operational, and reputational risks. This approach is ethically sound and aligns with regulatory expectations for due diligence and responsible corporate behavior. Specifically, it upholds the principle of transparency and fairness to stakeholders, ensuring that decisions are informed by a comprehensive understanding of potential outcomes, thereby preventing misrepresentation or undue market speculation. This aligns with general principles of corporate governance and investor protection found in most regulatory frameworks governing listed companies. An incorrect approach that prioritizes speed over thoroughness would fail to identify potential regulatory hurdles or unintended market reactions, leading to potential breaches of disclosure rules or market manipulation regulations. This could result in significant fines, reputational damage, and loss of investor confidence. Another incorrect approach that focuses solely on the immediate financial benefits without considering long-term sustainability or ethical implications would also be professionally unacceptable. This overlooks the broader responsibility of Sunny Optical to operate in a manner that is not only profitable but also compliant and ethical, thereby risking future viability. A third incorrect approach that relies on anecdotal evidence or internal optimism without rigorous data validation would be a failure of due diligence, potentially leading to decisions based on flawed assumptions, which is contrary to the principles of sound corporate governance and risk management. Professionals should employ a structured decision-making process that begins with clearly defining the problem or proposed action. This should be followed by identifying all relevant stakeholders and potential impacts, gathering comprehensive and reliable data, evaluating risks and benefits objectively, considering alternative courses of action, and finally, making a decision that is justifiable based on regulatory compliance, ethical principles, and the long-term interests of the company and its stakeholders. Continuous monitoring and review are also essential. Question 4. The monitoring system demonstrates a pattern of data access by a specific employee within Sunny Optical that deviates from their usual activity profile and potentially exceeds authorized parameters. This alert requires an immediate impact assessment to ensure compliance with data protection regulations. Which of the following approaches best addresses this situation? Option A. Conduct a detailed, fact-based investigation into the specific employee's data access, consulting relevant internal policies and data protection regulations to determine the nature and extent of any potential noncompliance before taking further action. Option B. Initiate an immediate, company-wide review of all employee data access logs to identify similar deviations and simultaneously suspend the employee's access pending a full investigation. Option C. Immediately report the flagged activity to external regulatory bodies without conducting any internal investigation to ensure full transparency and avoid potential penalties. Option D. Assume the alert is a false positive due to system calibration issues and instruct the IT department to adjust the monitoring system sensitivity without further investigation of the specific employee's activity. The correct answer is B. Initiate an immediate, company-wide review of all employee data access logs to identify similar deviations and simultaneously suspend the employee's access pending a full investigation. Explanation. This scenario presents a professional challenge because Sunny Optical's internal monitoring system has flagged potential noncompliance with regulatory requirements related to data handling. The challenge lies in accurately assessing the nature and severity of the flagged issue without overreacting or underestimating its implications. A hasty or misinformed response could lead to regulatory penalties, reputational damage, or operational disruption. Careful judgment is required to determine the most appropriate course of action based on the specific regulatory framework applicable to Sunny Optical's operations. The correct approach involves a thorough, evidence-based investigation to understand the root cause of the monitoring system's alert. This approach is professionally sound because it prioritizes accurate fact-finding before implementing any corrective measures. It aligns with regulatory principles that emphasize due diligence and a proactive approach to compliance. By seeking expert internal or external advice, Sunny Optical ensures that its assessment is informed by the relevant regulatory framework and best practices, leading to a targeted and effective resolution. This methodical process minimizes the risk of misinterpreting the alert and taking inappropriate actions. An incorrect approach would be to immediately implement broad, sweeping changes without understanding the specific nature of the flagged issue. This could lead to unnecessary operational disruption and costs, and might not address the actual compliance gap. Another incorrect approach would be to dismiss the alert without proper investigation, assuming it is a system error. This failure to investigate a potential compliance issue could result in significant regulatory penalties if the alert was indeed indicative of a genuine breach. Ignoring the alert also demonstrates a lack of commitment to regulatory adherence, which is ethically problematic and professionally irresponsible. Professionals should approach such situations by first acknowledging the alert and its potential significance. They should then gather all available data related to the alert. Next, they should consult the relevant regulatory framework and internal policies to understand the potential implications. Seeking input from compliance officers, legal counsel, or relevant subject matter experts is crucial. Based on this comprehensive understanding, a reasoned decision can be made regarding the appropriate next steps, which may include further investigation, corrective actions, or documentation of the findings. Question 5. Comparative studies suggest that the integration of advanced AI technologies into manufacturing processes, such as those being considered by Sunny Optical for quality control, can introduce novel data privacy and security risks. When evaluating a new AI-powered optical inspection system that will process images containing potentially sensitive information, which approach best ensures Sunny Optical's adherence to regulatory frameworks and ethical data handling principles? Option A. Rely primarily on the AI system vendor's compliance certifications and assurances regarding data security and privacy. Option B. Focus solely on the technical performance and efficiency gains of the AI system, assuming that data privacy and security concerns will be secondary to operational improvements. Option C. Implement the AI system immediately to gain a competitive advantage and address any compliance issues that may arise post-deployment. Option D. Conduct a comprehensive data protection impact assessment (DPIA) to identify and mitigate potential risks before deployment, ensuring alignment with relevant data privacy laws and industry best practices. The correct answer is D. Conduct a comprehensive data protection impact assessment (DPIA) to identify and mitigate potential risks before deployment, ensuring alignment with relevant data privacy laws and industry best practices. Explanation: this scenario presents a professional challenge for Sunny Optical's compliance team due to the inherent tension between business objectives and regulatory adherence. The need to quickly integrate a new technology while ensuring it meets all relevant data privacy and security standards requires careful judgment. A rushed implementation without proper due diligence could expose Sunny Optical to significant legal penalties, reputational damage, and loss of customer trust. The correct approach involves a proactive and thorough impact assessment that prioritizes regulatory compliance from the outset. This means identifying all applicable laws and guidelines, such as those pertaining to data protection and cybersecurity, and systematically evaluating how the new AI technology will interact with and potentially affect sensitive data. This approach is professionally sound because it aligns with the fundamental principles of responsible innovation and regulatory stewardship. Specifically, it demonstrates a commitment to safeguarding customer data and adhering to the spirit and letter of regulations designed to protect individuals' privacy. By embedding compliance checks into the development and deployment lifecycle, Sunny Optical mitigates risks before they materialize, fostering a culture of compliance and ethical data handling. An incorrect approach that bypasses a formal impact assessment and relies solely on the vendor's assurances is professionally unacceptable. This failure stems from a lack of independent verification and an over-reliance on third-party claims, which can be insufficient or misleading. Such an approach ignores Sunny Optical's ultimate responsibility for data protection under relevant regulations. Another incorrect approach, which involves implementing the technology first and addressing compliance concerns reactively, is equally flawed. This reactive stance creates a significant compliance gap, potentially leading to breaches and subsequent regulatory scrutiny. It prioritizes speed over safety, a dangerous trade-off in regulated industries. Third incorrect approach, focusing only on the technical functionality without considering the data privacy implications, overlooks a critical dimension of modern technology deployment. Regulations often extend beyond technical specifications to encompass how data is collected, processed, stored, and secured, making a purely technical evaluation insufficient. Professionals should adopt a decision-making framework that begins with understanding the regulatory landscape. This involves identifying all relevant legal and ethical obligations. Subsequently, a risk-based approach should be employed, where potential impacts on data privacy, security, and other compliance areas are systematically assessed. This assessment should inform the design and implementation phases, ensuring that compliance is built-in rather than bolted on. Regular reviews and audits are crucial to maintain ongoing compliance. Question 6. Strategic planning requires Sunny Optical to assess the potential impact of launching its new line of advanced optical sensors. Which of the following approaches best ensures that this strategic initiative aligns with regulatory frameworks and ethical business practices? Option A. Focus primarily on the technical specifications and manufacturing costs of the new sensors, with regulatory review being a secondary consideration, handled only if explicitly requested by authorities. Option B. Delegate the entire regulatory compliance responsibility for the new product line to the engineering department, trusting their technical expertise to implicitly cover all legal requirements. Option C. Conduct a comprehensive regulatory impact assessment involving legal and compliance teams to identify all potential implications for financial reporting, disclosure, and market conduct before the launch. Option D. Prioritize rapid market entry to gain a competitive advantage, assuming that any regulatory issues can be addressed retrospectively after the product is established. Correct answer is C. Conduct a comprehensive regulatory impact assessment involving legal and compliance teams to identify all potential implications for financial reporting, disclosure, and market conduct before the launch. Explanation. This scenario presents a professional challenge because Sunny Optical, as a publicly listed company, must navigate the complex interplay between its strategic business objectives and its regulatory obligations. The challenge lies in ensuring that the pursuit of market advantage does not inadvertently lead to non-compliance with relevant financial reporting standards and disclosure requirements. A failure to do so could result in significant penalties, reputational damage, and loss of investor confidence. Careful judgment is required to balance innovation with adherence to the law. The correct approach involves a thorough and proactive impact assessment that considers all potential regulatory implications before implementing new strategies. This approach is professionally sound because it prioritizes compliance and risk mitigation. By systematically evaluating how a new product launch might affect financial reporting, disclosure obligations, and potentially even competition law, Sunny Optical can identify and address any compliance gaps in advance. This aligns with the principles of good corporate governance and responsible business conduct, ensuring that strategic decisions are made with full awareness of their legal and ethical ramifications. An incorrect approach that focuses solely on the speed of market entry without adequate regulatory consideration is professionally unacceptable. This failure stems from a disregard for the legal framework governing financial reporting and market conduct. Specifically, it risks violating regulations that mandate accurate and timely disclosure of material information, potentially leading to misstatements in financial reports or inadequate disclosures about the new product's impact. Another incorrect approach that prioritizes internal cost savings over external regulatory review overlooks the critical need for independent verification and compliance checks. This can lead to overlooking subtle but significant regulatory requirements, such as those related to product safety, environmental impact, or data privacy, which could have severe legal and financial consequences. Professionals should employ a decision-making framework that integrates regulatory compliance into the core of strategic planning. This involves establishing clear internal policies and procedures for assessing the regulatory impact of all significant business initiatives. It also necessitates fostering a culture where employees are encouraged to raise compliance concerns without fear of reprisal. When faced with strategic decisions, professionals should ask, what are the potential regulatory implications of this action? And have we consulted with legal and compliance experts to ensure adherence to all applicable laws and guidelines? This proactive and integrated approach ensures that business objectives are pursued responsibly and sustainably. Question 7. Regulatory review indicates that Sunny Optical is planning to introduce a new line of advanced optical sensors. Considering the potential impact on existing compliance frameworks, which approach best ensures adherence to the Sunny Optical hiring assessment tests regulatory guidelines during this product integration? Option A. Delegate the entire compliance responsibility for the new product line to the product development team without dedicated compliance oversight. Option B. Conduct a thorough regulatory impact assessment to identify all applicable laws, regulations, and guidelines, analyze their implications for the new product line, and develop proactive compliance strategies. Option C. Perform a brief review of the most apparent regulations, focusing on immediate operational concerns. Option D. Proceed with the product launch assuming current compliance measures are sufficient and address any issues that may arise post-launch. The correct answer is B. Conduct a thorough regulatory impact assessment to identify all applicable laws, regulations, and guidelines, analyze their implications for the new product line, and develop proactive compliance strategies. Explanation. This scenario presents a professional challenge for Sunny Optical's compliance team due to the inherent conflict between business objectives and regulatory adherence. The need to quickly integrate a new product line, while ensuring all regulatory requirements are met, demands careful judgment to avoid potential legal repercussions, reputational damage, and financial penalties. The core difficulty lies in balancing speed to market with the thoroughness required for regulatory compliance. The correct approach involves a proactive and comprehensive regulatory impact assessment. This method is best professional practice because it systematically identifies all relevant regulations and guidelines applicable to the new product line. It then analyzes how these regulations affect Sunny Optical's operations, product design, manufacturing processes, marketing, and sales. This allows for the early detection of potential compliance gaps and the development of mitigation strategies before the product launch. This approach is ethically sound and legally defensible, as it demonstrates a commitment to responsible business conduct and adherence to the Sunny Optical hiring assessment test's specified regulatory framework. An incorrect approach would be to proceed with the product launch without a thorough impact assessment, assuming existing compliance measures are sufficient. This is a significant regulatory and ethical failure because it disregards the possibility that the new product line may introduce novel compliance risks or interact with existing regulations in unforeseen ways. It prioritizes speed over due diligence, potentially leading to violations of the Sunny Optical hiring assessment test's regulatory framework. Another incorrect approach is to conduct a superficial review, focusing only on the most obvious regulations. This is also a failure as it risks overlooking critical, less apparent compliance obligations. The regulatory landscape is complex, and a shallow assessment can leave Sunny Optical exposed to significant risks. It demonstrates a lack of diligence and a failure to uphold the highest standards of compliance expected under the Sunny Optical hiring assessment test's guidelines. Finally, an approach that delegates the entire responsibility to the product development team without adequate oversight from the compliance department is flawed. While the development team has technical expertise, they may lack the specialized knowledge of regulatory nuances. This delegation without proper checks and balances can lead to unintentional noncompliance, as the team might not be fully aware of all regulatory implications or the correct interpretation of the Sunny Optical hiring assessment test's framework. Professionals should adopt a structured decision-making process that begins with identifying the scope of the new initiative. This should be followed by a comprehensive research phase to pinpoint all applicable regulations and guidelines. A detailed impact analysis should then be performed, documenting potential risks and required actions. Finally, a robust implementation and monitoring plan should be established to ensure ongoing compliance. This systematic approach ensures that business objectives are pursued responsibly and within the bounds of the law and ethical conduct. Question 8. Consider a scenario where the finance department at Sunny Optical is exploring a new accounting treatment for a complex series of transactions that could significantly boost the company's reported profits for the upcoming fiscal year. The proposed treatment, while technically arguable under certain interpretations of accounting standards, might not fully reflect the underlying economic substance of the transactions. What is the most appropriate approach for Sunny Optical to take in assessing this proposed accounting treatment? Option A. Conduct a comprehensive impact assessment, evaluating the proposed treatment against all applicable accounting standards, regulatory requirements, and its potential effect on financial statement transparency and investor perception. Option B. Seek a legal opinion solely on whether the proposed treatment is technically permissible, without a broader assessment of its economic substance or regulatory implications. Option C. Proceed with the proposed accounting treatment if it can be justified by at least one plausible interpretation of the accounting standards, prioritizing the positive impact on reported earnings. Option D. Implement the proposed accounting treatment immediately to capitalize on the potential profit boost, deferring any detailed impact analysis until after the financial statements are released. The correct answer is A. Conduct a comprehensive impact assessment, evaluating the proposed treatment against all applicable accounting standards, regulatory requirements, and its potential effect on financial statement transparency and investor perception. Explanation. This scenario is professionally challenging because Sunny Optical, as a publicly listed company, has a fiduciary duty to its shareholders and must adhere to strict regulatory reporting requirements. The pressure to present favorable financial results can create a conflict between short-term performance and long-term compliance and ethical conduct. Careful judgment is required to balance business objectives with legal and ethical obligations. The correct approach involves a thorough and objective impact assessment, focusing on the potential consequences of the proposed accounting treatment on Sunny Optical's financial statements and regulatory filings. This approach prioritizes accuracy, transparency, and compliance with relevant accounting standards and securities regulations. By systematically evaluating the implications, Sunny Optical can ensure that its financial reporting is not misleading and that it meets its disclosure obligations. This aligns with the principles of fair representation and investor protection mandated by regulatory bodies. An incorrect approach that prioritizes the immediate positive impact on reported earnings without a comprehensive assessment fails to acknowledge the potential for misstatement and regulatory scrutiny. This could lead to violations of accounting standards, such as those requiring the recognition of all liabilities and the accurate valuation of assets. Furthermore, it could breach securities laws that prohibit misleading statements to investors, potentially resulting in fines, sanctions, and reputational damage for Sunny Optical. Another incorrect approach that relies solely on the opinion of a single department without broader consultation overlooks the importance of internal controls and independent review. Financial reporting decisions should involve cross-functional collaboration and, where appropriate, input from legal and compliance teams to ensure all perspectives and regulatory requirements are considered. This siloed approach increases the risk of overlooking critical compliance issues. Finally, an approach that seeks to find loopholes or interpretations that technically comply but obscure the economic reality of the transaction is ethically unsound and likely to be challenged by regulators. Professional decision-making in such situations requires a commitment to the spirit, not just the letter, of the law and accounting principles. Professionals should adopt a framework that includes understanding the relevant regulatory and accounting framework, identifying all potential accounting treatments and their implications, consulting with relevant stakeholders, documenting the decision-making process thoroughly, and seeking independent verification when necessary. The ultimate goal is to ensure that financial reporting is fair, accurate, and compliant. Question 9. System analysis indicates that Sunny Optical is planning to launch a new product that involves collecting and processing customer biometric data for enhanced security features. Prior to the launch, What is the most appropriate approach to ensure compliance with the Sunny Optical Hiring Assessment Test's regulatory framework regarding data privacy and security? Option A. Rely on the marketing department's understanding of customer expectations to gauge the acceptability of the data collection practices. Option B. Proceed with the launch immediately to gain a competitive advantage, assuming that existing data handling policies are sufficient. Option C. Conduct a comprehensive data privacy and security impact assessment, identifying potential risks and outlining mitigation strategies in alignment with the governing regulations. Option D. Assign the entire responsibility for regulatory compliance to the IT security team without broader business unit consultation. The correct answer is C. Conduct a comprehensive data privacy and security impact assessment, identifying potential risks and outlining mitigation strategies in alignment with the governing regulations. Explanation: this scenario presents a professional challenge for Sunny Optical employees due to the inherent conflict between business objectives and regulatory compliance. The pressure to meet targets can create an environment where shortcuts or misinterpretations of regulations might seem appealing, but adherence to the specified regulatory framework is paramount. Careful judgment is required to balance commercial realities with legal and ethical obligations. The correct approach involves a proactive and thorough impact assessment that prioritizes understanding the potential consequences of a new product launch on data privacy and security, specifically within the context of the Sunny Optical Hiring Assessment Test's governing regulations. This approach is professionally sound because it aligns with the principles of responsible data handling and risk mitigation mandated by regulatory bodies. By systematically evaluating how the new product might affect personal data, Sunny Optical can identify potential compliance gaps before they become issues. This proactive stance demonstrates a commitment to regulatory adherence and protects both the company and its stakeholders from legal repercussions and reputational damage. An incorrect approach that focuses solely on the speed of market entry without considering regulatory implications is professionally unacceptable. This failure stems from a disregard for the legal obligations Sunny Optical has concerning data protection. Such an approach risks violating specific provisions of the governing regulations, leading to fines, sanctions, and loss of trust. Another incorrect approach that relies on assumptions about data handling without independent verification is also professionally flawed. This demonstrates a lack of due diligence and a failure to adequately assess risks. Regulatory frameworks often require demonstrable evidence of compliance, and relying on assumptions rather than concrete assessments can leave Sunny Optical vulnerable to noncompliance findings. Finally, an approach that delegates the entire responsibility for regulatory compliance to a single department without cross-functional oversight is problematic. While specialized departments have expertise, a comprehensive impact assessment requires input and understanding from various business units to ensure all potential risks are identified and addressed. This siloed approach can lead to blind spots and incomplete assessments, ultimately undermining the effectiveness of the compliance efforts. Professionals should adopt a decision-making framework that begins with a clear understanding of the relevant regulatory landscape. This involves identifying all applicable laws and guidelines. Next, they should conduct a comprehensive risk assessment, considering potential impacts on data privacy, security, and other compliance areas. This assessment should be followed by the development and implementation of mitigation strategies. Regular review and updates to these strategies are crucial to ensure ongoing compliance. In situations involving new product launches or significant business changes, a formal impact assessment process should be integrated into the project lifecycle. Question 10. The investigation demonstrates that Sunny Optical's management is considering an accounting treatment for a significant new product launch that could potentially boost reported earnings for the current fiscal year, thereby aligning with analyst forecasts. However, there is uncertainty regarding the precise timing and magnitude of associated costs and potential revenue recognition. What is the most appropriate approach for Sunny Optical's finance team to take in this situation? Option A. Conduct a comprehensive impact assessment of the proposed accounting treatment, meticulously analyzing its financial implications against relevant accounting standards and evaluating its potential effect on reported performance and financial position. Option B. Proceed with the accounting treatment that is most likely to meet analyst expectations. Assuming that positive market perception will ultimately benefit the company, Option C. Delay the recognition of associated costs and potential revenue until the outcomes are more certain, even if this means pushing recognition into the next fiscal year. Option D. Adopt an aggressive interpretation of accounting standards that favors the recognition of revenue and deferral of costs, as long as it can be technically justified. The correct answer is A. Conduct a comprehensive impact assessment of the proposed accounting treatment, meticulously analyzing its financial implications against relevant accounting standards, and evaluating its potential effect on reported performance and financial position. Explanation. This scenario presents a professional challenge because Sunny Optical, as a publicly listed company, is subject to stringent regulations regarding financial reporting and disclosure. The pressure to meet market expectations can create an environment where management might be tempted to manipulate financial results. Therefore, a careful and ethical judgment is required to ensure compliance and maintain investor trust. The correct approach involves a thorough and objective impact assessment of the proposed accounting treatment. This means meticulously analyzing the financial implications, considering the relevant accounting standards, e.g., IFRS or local GAAP as applicable to Sunny Optical's jurisdiction, and evaluating the potential impact on the company's reported performance and financial position. This approach is professionally sound because it prioritizes accuracy, transparency, and compliance with regulatory frameworks. It ensures that any accounting decisions are well supported by evidence and adhere to established principles, thereby safeguarding the integrity of Sunny Optical's financial statements and protecting stakeholders from misleading information. An incorrect approach would be to proceed with the accounting treatment solely based on the desire to meet analyst expectations without a rigorous impact assessment. This is a regulatory and ethical failure because it prioritizes short-term market perception over accurate financial reporting, could lead to misstatements, breaches of accounting standards, and potential violations of securities laws, which carry severe penalties. Another incorrect approach would be to delay the recognition of the expense or liability, hoping for more favorable future period. This constitutes an improper deferral of costs or recognition of liabilities, which is a form of financial misrepresentation and a violation of the principle of prudence in accounting. Finally, adopting an aggressive interpretation of accounting standards without proper justification or consultation with accounting experts is also an incorrect approach. This can lead to non-compliance and a lack of credibility in the financial reporting. Professionals should employ a decision-making framework that begins with understanding the relevant regulatory and accounting standards. They should then gather all necessary information, conduct a comprehensive impact assessment, and consult with internal or external experts if there is any uncertainty. The decision should be documented thoroughly, with clear reasoning based on the applicable standards and the impact assessment. Ethical considerations, such as the duty to stakeholders and the integrity of financial reporting, should always be paramount. Question 11. The analysis reveals that Sunny Optical is preparing to launch a new line of smart glasses in multiple international markets. While the product development team is confident in the product's technical specifications, there is uncertainty regarding the specific regulatory compliance requirements for advanced optical and electronic components in key target regions. The marketing department is pushing for an expedited launch to capture early market share. What is the most professionally responsible approach for Sunny Optical's compliance department to take? Option A. Delay the launch indefinitely until every possible regulatory scenario for all potential markets has been exhaustively researched and addressed. Option B. Rely solely on the product development team's internal assessment of compliance, as they are experts in the product's technical capabilities. Option C. Proactively engage with the relevant regulatory bodies in each target market to clarify specific compliance requirements for the smart glasses and integrate this feedback into the product development and launch plan. Option D. Proceed with the launch, assuming the product meets general industry standards, and address any specific regulatory feedback post-launch. The correct answer is D. Proceed with the launch, assuming the product meets general industry standards, and address any specific regulatory feedback post-launch. Explanation. This scenario presents a professional challenge for Sunny Optical's compliance team due to the inherent conflict between a new product launch timeline and the need for thorough regulatory review. The pressure to meet market demands can create an environment where shortcuts are tempting, but adherence to regulatory frameworks is paramount to avoid significant legal, financial, and reputational damage. Careful judgment is required to balance business objectives with compliance obligations. The correct approach involves proactively engaging with the relevant regulatory bodies for the target markets of Sunny Optical's new smart glasses, seeking clarification on specific product compliance requirements, and integrating this feedback into the product development lifecycle. This demonstrates a commitment to responsible innovation and proactive risk management. Specifically, this approach aligns with the principles of regulatory compliance and due diligence expected of companies operating in regulated industries. It ensures that Sunny Optical is not only aware of, but actively addresses potential compliance issues before market entry, thereby minimizing the risk of product recalls, fines, or market access denial. This proactive stance is ethically sound as it prioritizes consumer safety and fair market practices. An incorrect approach of proceeding with the launch without definitive regulatory approval, relying on assumptions about compliance, is professionally unacceptable. Its failure to conduct adequate due diligence exposes Sunny Optical to significant regulatory penalties, potential product bans, and severe reputational damage. It violates the ethical obligation to ensure products meet safety and performance standards mandated by law. Another incorrect approach, which is to delay the launch indefinitely until every conceivable regulatory scenario is addressed, is also professionally unsound. While caution is necessary, an indefinite delay can lead to loss of competitive advantage, missed market opportunities, and internal stakeholder dissatisfaction, without necessarily guaranteeing future compliance if the regulatory landscape evolves. This approach fails to strike a balance between risk mitigation and business viability. Professionals should employ a decision-making framework that prioritizes understanding the regulatory landscape, assessing potential risks, and developing mitigation strategies. This involves early and continuous engagement with compliance experts and regulatory bodies, documenting all compliance efforts, and establishing clear internal processes for regulatory review. The framework should encourage a proactive, rather than reactive, approach to compliance, ensuring that business objectives are pursued within the bounds of legal and ethical requirements. Question 12. Governance review demonstrates that Sunny Optical has identified a significant, unquantified potential impact on its supply chain due to a new geopolitical development. The internal team has gathered preliminary data suggesting this impact could be material to the company's future performance. What is the most appropriate immediate next step for Sunny Optical's management? Option A. Initiate a formal internal investigation and impact assessment involving relevant departments to accurately quantify the potential effects and determine the appropriate disclosure strategy in line with regulatory requirements. Option B. Immediately issue a press release to the market acknowledging the geopolitical development and its potential, albeit unquantified, impact on the supply chain. Option C. Delay any public announcement until a comprehensive, fully detailed report on the impact is finalized, which may take several weeks. Option D. Inform a select group of key institutional investors about the preliminary findings to manage their expectations. The correct answer is A. Initiate a formal internal investigation and impact assessment involving relevant departments to accurately quantify the potential effects and determine the appropriate disclosure strategy in line with regulatory requirements. Explanation. This scenario presents a professional challenge because Sunny Optical, as a publicly listed entity, is subject to stringent regulatory oversight concerning its financial reporting and disclosures. The challenge lies in balancing the need for timely and accurate information with the potential for market manipulation or insider trading if sensitive, non-public information is leaked prematurely. Careful judgment is required to ensure compliance with disclosure obligations while safeguarding the integrity of the market. The correct approach involves a structured and documented internal review process to verify the accuracy and completeness of the information before any public announcement. This aligns with the principles of fair disclosure and market integrity mandated by regulatory bodies. By ensuring all facts are confirmed and the implications understood, Sunny Optical mitigates the risk of making erroneous statements that could mislead investors or lead to regulatory sanctions. This approach prioritizes accuracy and compliance, which are paramount in financial communications. An incorrect approach that involves immediately disclosing the preliminary findings without verification poses significant regulatory and ethical risks. This could be construed as a premature or incomplete disclosure, potentially leading to market volatility based on unconfirmed information. It violates the principle of providing accurate and reliable information to investors. Another incorrect approach, which is to withhold the information indefinitely until a perfect, fully polished report is ready, is also problematic. While accuracy is crucial, undue delay in disclosing material information can also be a breach of disclosure obligations, especially if the delay is not justified by a genuine need for verification. This can create an uneven playing field for investors who are not privy to the information. Finally, an incorrect approach of selectively disclosing the information to a small group of stakeholders before a public announcement is a clear violation of insider trading regulations and fair disclosure principles. This creates an unfair advantage for those receiving the information and undermines market confidence. Professionals should employ a decision-making framework that prioritizes adherence to regulatory requirements for timely and accurate disclosure. This involves establishing clear internal protocols for information verification, risk assessment, and communication. When faced with potentially material information, the process should involve consulting with legal and compliance departments, assessing the materiality of the information, and determining the appropriate disclosure timing and method in accordance with applicable regulations. Question 13. To address the challenge of a potential strategic partner requesting detailed insights into Sunny Optical's upcoming product development roadmap and proprietary manufacturing techniques during initial exploratory discussions, what is the most appropriate course of action to ensure compliance with regulatory frameworks and protect Sunny Optical's competitive interests? Option A. Disclose the information, framing it as general industry knowledge that Sunny Optical has developed to avoid the need for formal agreements. Option B. Consult with Sunny Optical's legal or compliance department to determine the company's policy on sharing pre-agreement information and to initiate the process of drafting and executing a non-disclosure agreement (NDA) before any sensitive data is exchanged. Option C. Immediately provide the requested information, as this is crucial for demonstrating transparency and fostering a strong partnership from the outset. Option D. Share the information, but only after verbally assuring the potential partner that the details are confidential and should not be shared further. The correct answer is C. Immediately provide the requested information, as this is crucial for demonstrating transparency and fostering a strong partnership from the outset. Explanation. Scenario analysis. This scenario presents a professional challenge for Sunny Optical employees due to the inherent conflict between maintaining competitive advantage through proprietary information and the ethical obligation to act with integrity and transparency, especially when dealing with potential business partners. The pressure to secure a new partnership could lead to a temptation to disclose sensitive information prematurely. Navigating this requires a deep understanding of Sunny Optical's internal policies and relevant regulatory expectations regarding the protection of confidential information and fair dealing. The challenge lies in balancing business development goals with legal and ethical boundaries. Correct approach analysis. The correct approach involves a structured and compliant process for handling sensitive information during partnership discussions. This entails first confirming the existence of a non-disclosure agreement, NDA, or similar confidentiality undertaking with the potential partner. If an NDA is in place, the next step is to adhere strictly to its terms, disclosing only information explicitly permitted within the agreement. If no NDA is in place, the appropriate action is to consult with Sunny Optical's legal or compliance department to determine the company's policy on sharing pre-agreement information, and to draft and execute an NDA before any sensitive data is exchanged. This approach is correct because it aligns with the principles of data protection, intellectual property rights, and fair business practices, which are often codified in regulations governing commercial dealings and are fundamental to maintaining trust and avoiding legal repercussions. It upholds Sunny Optical's duty to protect its proprietary information and ensures that any disclosures are made under a legally binding framework. Incorrect approach is analysis. Disclosing the requested information without first verifying the existence of an NDA or consulting with the legal department is professionally unacceptable. This action directly violates the principle of confidentiality and could expose Sunny Optical to significant risks, including the loss of competitive advantage, intellectual property theft, and potential legal action for breach of confidence. Demonstrates a disregard for internal policies and regulatory expectations concerning the safeguarding of sensitive corporate data. Assuming the potential partner is trustworthy and disclosing the information based on that assumption, without any formal agreement, is also professionally flawed. Trust is important in business, but it cannot replace legal safeguards. This approach bypasses necessary due diligence and contractual protection, leaving Sunny Optical vulnerable to misuse of its information. It fails to meet the standard of professional care expected in handling proprietary assets, suggesting that the information is generally known or common knowledge within the industry to justify disclosure without an NDA is a misrepresentation and a failure to uphold ethical standards. Even if some aspects of the information might be inferred by competitors, specific details about Sunny Optical's product development roadmap or manufacturing processes are likely proprietary. This approach attempts to circumvent the need for a formal agreement by downplaying the sensitivity of the information, which is a deceptive practice and ethically unsound. Professional reasoning. Professionals at Sunny Optical should adopt a decision-making framework that prioritizes compliance and ethical conduct. This involves 1. Understanding and adhering to Sunny Optical's internal policies on information sharing and confidentiality. 2. Recognizing the importance of formal agreements, such as NDAs, before disclosing any sensitive or proprietary information. 3. Consulting with the legal or compliance department when in doubt about the appropriate course of action or the interpretation of policies. 4. Always acting with integrity and transparency, ensuring that all business dealings are conducted in a manner that protects the company's assets and reputation. 5. Evaluating potential risks associated with information disclosure and implementing appropriate mitigation strategies. Question 14. The review process indicates that a key supplier to Sunny Optical has offered the company's procurement team an all-expenses-paid trip to a luxury resort for a week, ostensibly to strengthen business partnerships. The procurement team is responsible for negotiating contracts and managing the ongoing relationship with this supplier. What is the most appropriate course of action for the Sunny Optical procurement team to take in response to this offer? Option A. Accept the supplier's offer immediately, as it is a common practice in the industry to foster strong supplier relationships. Option B. Conduct a formal impact assessment to evaluate the offer against Sunny Optical's conflict of interest policy and relevant regulatory guidelines, documenting the assessment and seeking appropriate internal approvals before making any decision. Option C. Politely decline the offer, stating that the team cannot accept such gifts due to company policy without further investigation. Option D. Accept the offer and then inform the head of procurement of the acceptance via email for their awareness. Correct answer is B. Conduct a formal impact assessment to evaluate the offer against Sunny Optical's conflict of interest policy and relevant regulatory guidelines, documenting the assessment and seeking appropriate internal approvals before making any decision. Explanation. This scenario presents a professional challenge for Sunny Optical's compliance team due to the potential for conflicts of interest and the need to maintain the integrity of financial reporting. The team must navigate the delicate balance between fostering positive relationships with suppliers and upholding their fiduciary duty to the company and its shareholders. Careful judgment is required to ensure that any benefits received do not influence or appear to influence business decisions in an improper manner. The correct approach involves a thorough impact assessment that prioritizes transparency and adherence to Sunny Optical's internal policies and relevant regulatory guidelines. This approach is best professional practice because it systematically evaluates the potential risks and benefits associated with the supplier's offer. By documenting the assessment, seeking appropriate internal approvals, and ensuring that any accepted benefits are of nominal value and do not create an obligation or compromise independent judgment, the team upholds ethical standards and regulatory compliance. This aligns with principles of good corporate governance and the prevention of bribery and corruption, which are often codified in regulations governing financial markets and business conduct. An incorrect approach that involves accepting the supplier's offer without a formal assessment or approval fails to acknowledge the potential for a conflict of interest. This could lead to decisions being made based on personal gain rather than the best interests of Sunny Optical, potentially violating internal codes of conduct and broader ethical expectations. Another incorrect approach, which is to immediately reject the offer without considering its nature or value, might be overly cautious and could negatively impact supplier relationships unnecessarily, though it avoids the risk of impropriety. However, a more nuanced assessment is generally preferred. A third incorrect approach, which is to accept the offer and then disclose it informally to a manager, lacks the rigor of a formal impact assessment and documented approval process. This informal disclosure may not be sufficient to satisfy regulatory requirements or internal audit standards, leaving the company vulnerable to accusations of inadequate oversight and potential conflicts of interest. Professionals should employ a decision-making framework that begins with identifying potential conflicts of interest. This should be followed by consulting internal policies and relevant regulations. A structured impact assessment, including documenting the offer, evaluating its potential influence, and seeking appropriate approvals, is crucial. If there is any doubt, seeking guidance from the compliance department or legal counsel is essential. The ultimate goal is to ensure that all business decisions are made with integrity, transparency, and in the best interests of Sunny Optical. Question 15. What factors determine the necessity and scope of a data privacy impact assessment for new customer data processing initiatives at Sunny Optical? Option A. The perceived urgency of the business need for the new data processing and the cost of implementing additional security measures. Option B. The opinion of the IT department regarding the technical feasibility of securing the data and the historical absence of data breaches. Option C. The volume of data processed and the potential for increased sales revenue generated by the new initiative. Option D. The sensitivity of the personal data being processed, the potential for harm to individuals, and the scale and nature of the processing activities. The correct answer is D. The sensitivity of the personal data being processed, the potential for harm to individuals, and the scale and nature of the processing activities. Explanation. This scenario presents a professional challenge for Sunny Optical employees regarding the responsible handling of sensitive customer data. The core difficulty lies in balancing the company's operational needs with the stringent data privacy regulations applicable in the relevant jurisdiction. Employees must exercise careful judgment to ensure compliance, protect customer trust, and avoid significant legal and reputational damage. The need for a robust impact assessment stems from the potential for unauthorized access or misuse of personal information, which can have severe consequences. The correct approach involves conducting a thorough data privacy impact assessment (DPIA) before implementing any new data processing activities. This assessment systematically identifies and evaluates the risks to individuals' privacy posed by the proposed processing. It requires understanding the nature, scope, context, and purposes of the processing, and then determining the likelihood and severity of potential harm. Regulatory frameworks, such as the General Data Protection Regulation, GDPR, if applicable to the exam's jurisdiction, mandate DPIA for high-risk processing activities. This approach ensures that potential privacy risks are identified and mitigated proactively, aligning with legal obligations and ethical principles of data protection by design and by default. An incorrect approach would be to proceed with data processing without a formal assessment, assuming that existing security measures are sufficient. This fails to acknowledge the dynamic nature of data processing and the potential for unforeseen risks. It directly contravenes regulatory requirements that mandate proactive risk assessment and could lead to breaches of data protection laws, resulting in substantial fines and loss of customer confidence. Another incorrect approach is to rely solely on IT department assurances without independent verification or a structured assessment process. While IT plays a crucial role in security, their perspective may not encompass the full spectrum of privacy risks from a data subject's viewpoint or fully align with all regulatory nuances. This oversight can lead to compliance gaps and potential violations. A third incorrect approach is to prioritize business expediency over privacy considerations, making decisions based on speed of implementation rather than a comprehensive understanding of data protection implications. This demonstrates a disregard for regulatory obligations and ethical responsibilities, increasing the likelihood of privacy breaches and subsequent penalties. Professionals should adopt a decision-making framework that integrates regulatory compliance and ethical considerations into every stage of data processing. This involves understanding the relevant data protection laws, conducting thorough impact assessments, implementing appropriate technical and organizational measures, and fostering a culture of privacy awareness within the organization. When faced with decisions concerning data handling, professionals should ask, does this processing activity comply with all applicable data protection laws and regulations? What are the potential risks to individuals' privacy, and how can these risks be effectively mitigated? Have we considered the principles of data minimization, purpose limitation, and transparency? Question 16. Governance review demonstrates that Sunny Optical has identified a significant technological advancement that is expected to substantially impact its future revenue streams. The board is aware of this development and is considering how to communicate it to the market. What is the most appropriate immediate course of action for Sunny Optical's board to take regarding this information? Option A. Immediately engage the company's legal and compliance teams to assess the materiality of the information and determine the appropriate disclosure timeline and method in accordance with regulatory requirements. Option B. Instruct the head of investor relations to subtly hint at upcoming positive news to key financial analysts to gauge market reaction. Option C. Inform the company's largest institutional shareholders about the advancement to ensure they are aware of the positive development. Option D. Defer the announcement of this advancement until the company's next scheduled quarterly earnings report to avoid unnecessary market volatility. Correct answer is A. Immediately engage the company's legal and compliance teams to assess the materiality of the information and determine the appropriate disclosure timeline and method in accordance with regulatory requirements. Explanation. Scenario analysis. This scenario is professionally challenging because Sunny Optical, as a publicly listed entity, must adhere to stringent disclosure requirements and maintain market confidence. The challenge lies in balancing the need for timely information dissemination with the potential for market manipulation or insider trading if information is released prematurely or selectively. The board's responsibility is to ensure that all stakeholders receive material information simultaneously and that the company's reputation for transparency and integrity is upheld. Correct approach analysis. The correct approach involves immediately engaging the company's legal and compliance teams to assess the materiality of the information and determine the appropriate disclosure timeline and method in accordance with the relevant regulatory framework for listed companies. This ensures that any announcement is compliant, accurate, and disseminated to all market participants at the same time, thereby preventing any unfair advantage and maintaining market integrity. This aligns with the principles of fair disclosure and market abuse prevention mandated by regulatory bodies overseeing listed companies. Incorrect approaches analysis. Releasing the information to a select group of major shareholders before a public announcement is incorrect because it constitutes selective disclosure, which is a form of market abuse. This practice can lead to insider trading concerns and erodes market confidence by creating an uneven playing field for investors. Delaying the announcement until the next scheduled quarterly report, without considering the immediate materiality of the information, is incorrect. If the information is material and price-sensitive, delaying its disclosure could be seen as misleading the market and potentially violating continuous disclosure obligations. Authorizing the head of investor relations to manage the information flow by providing hints to key analysts is incorrect. This approach is highly subjective and opens the door to selective disclosure and market manipulation, as it relies on informal channels rather than formal, simultaneous public announcements. It undermines the principle of equal access to information for all investors. Professional reasoning. Professionals facing such situations should first identify the nature and potential impact of the information. They must then consult the company's internal policies and relevant regulatory guidelines concerning disclosure. A structured approach involving legal and compliance assessment is crucial to determine materiality and the correct disclosure procedure. The guiding principle should always be transparency, fairness, and compliance with all applicable regulations to protect the company's reputation and market integrity. Question 17. Compliance review shows that Sunny Optical is in preliminary discussions regarding a potential significant acquisition that could materially impact its share price. What is the most appropriate course of action to ensure adherence to regulatory disclosure requirements? Option A. Immediately inform the Stock Exchange and relevant Securities Commission of the ongoing discussions and seek guidance on disclosure timing and content. Option B. Assume that as the discussions are not yet finalized, no regulatory disclosure is immediately required and wait for the deal to conclude. Option C. Proceed with the acquisition and disclose the information to the public only once the deal is fully completed. Option D. Share the details of the potential acquisition with key institutional investors to gauge their reaction before any public announcement. The correct answer is A. Immediately inform the Stock Exchange and relevant Securities Commission of the ongoing discussions and seek guidance on disclosure timing and content. Explanation. This scenario presents a professional challenge because Sunny Optical, as a publicly listed company, is subject to stringent regulatory oversight regarding its financial reporting and disclosure obligations. The challenge lies in balancing the need for timely and accurate information dissemination with the potential for market manipulation or insider trading if sensitive information is released prematurely or without proper context. Careful judgment is required to ensure compliance with all applicable regulations while maintaining market integrity and investor confidence. The correct approach involves a proactive and structured engagement with regulatory bodies, specifically the relevant Securities Commission and Stock Exchange, to seek clarification and guidance on the disclosure requirements for the potential acquisition. This approach demonstrates a commitment to transparency and adherence to legal frameworks. By engaging early, Sunny Optical can ensure that its disclosure strategy aligns with regulatory expectations, minimizing the risk of non-compliance. This proactive stance is ethically sound as it prioritizes fair disclosure and prevents potential information asymmetry that could disadvantage other market participants. An incorrect approach would be to proceed with the acquisition and disclose the information only after the deal is finalized without prior consultation. This failure to engage with regulators proactively could lead to accusations of delayed or inadequate disclosure, potentially violating securities laws and stock exchange listing rules. Another incorrect approach would be to selectively disclose information to a limited group of stakeholders before a public announcement. This constitutes selective disclosure and could be construed as insider trading or market manipulation, severely damaging Sunny Optical's reputation and incurring significant legal penalties. A third incorrect approach would be to dismiss the need for regulatory consultation, assuming the acquisition is a private matter. This demonstrates a fundamental misunderstanding of the regulatory landscape for listed companies and a disregard for the principles of fair market conduct. Professionals should adopt a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves understanding the specific reporting obligations under the relevant jurisdiction's securities laws and stock exchange rules. When faced with significant corporate events like acquisitions, the framework should include a step for seeking expert legal and compliance advice, and where necessary, engaging directly with regulatory authorities to ensure all disclosure requirements are met in a timely and appropriate manner. Question 18. Governance review demonstrates that a significant accounting misstatement has been identified within Sunny Optical's recent financial reporting. The internal audit team has flagged this as a potential issue requiring immediate attention. What is the most appropriate course of action for Sunny Optical's management to take? Option A. Inform only a select group of senior executives about the misstatement to manage internal communication and avoid public concern. Option B. Delay reporting the misstatement to the audit committee and external auditors until further internal investigation can determine its full scope. Option C. Immediately escalate the identified misstatement to the audit committee and engage external auditors for an independent assessment and guidance on corrective actions. Option D. Attempt to rectify the misstatement internally without involving the audit committee or external auditors to avoid unnecessary scrutiny. The correct answer is C. Immediately escalate the identified misstatement to the audit committee and engage external auditors for an independent assessment and guidance on corrective actions. Explanation. This scenario presents a professional challenge because Sunny Optical, as a publicly listed company, has a responsibility to ensure its financial reporting is accurate and transparent. The governance review has identified a potential misstatement, which, if material, could mislead investors and other stakeholders. The challenge lies in determining the appropriate course of action to address this finding in a manner that upholds regulatory compliance and ethical standards. Careful judgment is required to assess the materiality of the misstatement and to implement corrective measures without undue delay. The correct approach involves promptly escalating the issue to the audit committee and seeking independent advice from external auditors. This demonstrates a commitment to good governance and regulatory compliance. By involving the audit committee, Sunny Optical ensures that the issue is reviewed by individuals with oversight responsibility for financial reporting. Engaging external auditors provides an objective assessment of the misstatement's materiality and the necessary adjustments. This aligns with the principles of robust financial oversight and the regulatory expectation that companies address accounting errors diligently. An incorrect approach would be to attempt to correct the misstatement internally without involving the audit committee or external auditors. This could lead to an inadequate assessment of materiality and a failure to implement appropriate corrective actions, potentially breaching accounting standards and regulatory disclosure requirements. Another incorrect approach would be to delay reporting the issue to the audit committee and external auditors, hoping it might resolve itself or be overlooked. This constitutes a failure in governance and a potential breach of duty to shareholders and the market, as it obstructs timely and accurate financial reporting. Finally, an approach that involves selectively disclosing the misstatement only to certain stakeholders would be a severe ethical and regulatory breach, undermining the principle of fair and equal information dissemination to all investors. Professionals should adopt a decision-making framework that prioritizes transparency, accountability, and compliance. When a potential financial misstatement is identified, the immediate steps should be to 1. Document the finding thoroughly. 2. Assess its potential impact and materiality. 3. Escalate the issue to the appropriate oversight body, e.g., audit committee. And 4. Engage independent experts, e.g., external auditors, for an objective evaluation and guidance on remediation. This structured approach ensures that all relevant parties are informed, that the issue is addressed with the necessary expertise, and that regulatory obligations are met. Question 19. The performance metrics show a consistent downward trend in a specific product line's quality control pass rate at Sunny Optical over the last 2 quarters. While the current pass rate remains above the minimum acceptable threshold set by internal policy, it is approaching a level that has historically preceded minor regulatory inquiries in similar industries. What is the most appropriate immediate course of action for the compliance officer at Sunny Optical? Option A. Advise the production team to temporarily reduce output for that product line to avoid further declines. Option B. Immediately report the declining pass rate to the relevant regulatory body, citing the historical precedent. Option C. Initiate a comprehensive internal investigation to identify the root cause of the declining pass rate and assess potential compliance implications. Option D. Conclude that the pass rate is still within acceptable internal limits and monitor the situation without further action. The correct answer is C. Initiate a comprehensive internal investigation to identify the root cause of the declining pass rate and assess potential compliance implications. Explanation. This scenario presents a professional challenge because Sunny Optical's internal performance metrics, while indicating a potential issue, are not definitive proof of a regulatory breach. The challenge lies in balancing the need for proactive investigation and compliance with the risk of overreacting or misinterpreting data without proper context. Careful judgment is required to determine the appropriate next steps without prematurely accusing or unduly alarming stakeholders. The correct approach involves initiating a thorough internal review to understand the root cause of the performance metric deviations. This approach is professionally sound and ethically justified because it prioritizes a fact-based investigation before taking any definitive action. It aligns with the principles of due diligence and responsible corporate conduct, ensuring that any subsequent actions are informed and proportionate. This methodical process respects the company's internal processes and avoids premature conclusions that could lead to reputational damage or unnecessary regulatory scrutiny. An approach that immediately escalates the issue to external regulators without internal investigation is professionally unacceptable. This fails to demonstrate due diligence and could be perceived as an overreaction, potentially straining the relationship with regulatory bodies. It bypasses the company's internal controls and may lead to unnecessary investigations based on incomplete information. Another incorrect approach is to dismiss the performance metrics as insignificant without further inquiry. This demonstrates a lack of diligence and a potential disregard for internal controls and compliance obligations. It risks overlooking a genuine issue that could have regulatory implications, exposing Sunny Optical to future penalties or sanctions. Professionals should employ a decision-making framework that begins with data gathering and analysis. When performance metrics suggest a deviation, The first step is always to understand the context and potential causes internally. This involves consulting relevant policies, procedures, and subject matter experts. If the internal review reveals a potential regulatory noncompliance, then a structured escalation process, potentially involving external counsel or regulators, should be followed. This ensures that actions are always evidence-based and aligned with the company's compliance obligations and risk appetite. Question 20. Market research demonstrates a significant positive correlation between Sunny Optical's product launch announcements and increased investor interest. As the company prepares to launch a new line of advanced optical sensors, the marketing department proposes a proactive public relations campaign designed to generate maximum buzz and highlight anticipated market leadership. The compliance department is tasked with assessing the potential regulatory implications of this campaign. Which of the following approaches best ensures Sunny Optical's adherence to financial regulatory frameworks and ethical conduct? Option A. Focus the campaign solely on technical specifications and product features, avoiding any forward-looking statements about market share or financial performance to minimize regulatory exposure. Option B. Prioritize rapid dissemination of exciting product details to capture immediate market attention, with a post-launch review by compliance to address any potential issues. Option C. Conduct a comprehensive impact assessment of the proposed campaign, scrutinizing all planned communications for potential misstatements, omissions, or manipulative intent, and ensuring alignment with disclosure obligations. Option D. Proceed with the marketing campaign as planned, focusing on amplifying positive messaging and anticipating strong market reception, with a brief review by the marketing lead to ensure general accuracy. The correct answer is C. Conduct a comprehensive impact assessment of the proposed campaign, scrutinizing all planned communications for potential misstatements, omissions, or manipulative intent, and ensuring alignment with disclosure obligations. Explanation. This scenario presents a professional challenge for Sunny Optical's compliance team due to the inherent conflict between the desire to leverage positive market sentiment and the stringent requirements of financial regulation. The challenge lies in ensuring that any public statements made by Sunny Optical are not misleading or manipulative, particularly when discussing future product performance or market share, which could influence investor decisions. Careful judgment is required to balance promotional activities with regulatory obligations. The correct approach involves a thorough impact assessment that considers the potential for market manipulation and ensures compliance with relevant financial regulations. This approach is best professional practice because it prioritizes transparency and investor protection, core tenets of financial market integrity. Specifically, it aligns with the principles of fair disclosure and prohibits the dissemination of false or misleading information that could affect the price of securities. By conducting a detailed assessment, Sunny Optical can identify potential risks and implement safeguards to prevent regulatory breaches. An incorrect approach that focuses solely on maximizing positive market reaction, without a robust impact assessment risks, violating regulations against market abuse and misleading statements. Such an approach could be interpreted as an attempt to artificially inflate stock prices or create a false impression of the company's prospects. This failure to consider the regulatory implications can lead to severe penalties, reputational damage, and loss of investor confidence. Another incorrect approach that prioritizes speed of communication over accuracy and regulatory review also poses significant risks. In the fast-paced financial markets, timely information is important, but it must be accurate and compliant. Rushing to release information without proper vetting can result in unintentional misstatements or omissions, which are still subject to regulatory scrutiny and can have serious consequences. The professional decision-making process for similar situations should involve a structured risk assessment framework. This framework should include identifying potential regulatory pitfalls, evaluating the likelihood and impact of non-compliance, and developing mitigation strategies. Before any public communication that could affect market perception or stock price, a review by the compliance department and legal counsel is essential to ensure adherence to all applicable laws and regulations. The focus should always be on providing truthful, accurate, and balanced information to the market.